how do you see the trade finance landscape evolving in the next 5 to 10 years?
If we provide transparency and we set up, in a sense, we build up this industry in a more institutionalized way, which means a lot of work.
My name is Charles Osborne. I'm a director here at Trade Finance Global.
We're an investment advisor specialized in the commodity trade finance space.
Welcome to Trade Finance Talks, your go-to trade, treasury, and payments podcast. Brought to you by Trade Finance Global. Hello and welcome to the next installment of Trade Finance Talks. My name is Charles Osborne. I'm a director here at Trade Finance Global. I'm delighted to be joined here by David Wigger from Liquid Finance and to have this conversation in regards to bringing new liquidity into the CTF market. David, welcome. Thanks very much for joining us. Perhaps just to start, maybe if you could tell us a little bit about yourself and your role with Liquid Finance.
Yeah, of course. So again, thank you very much, Charlie, for this opportunity. I will just give you a brief summary of Liquid Finance. Basically, we're an investment advisor specialized in the commodity trade finance space. We just do it a bit differently because we provide, or let's say we are able to streamline this highly attractive industry. And obviously, thanks to our technology, I believe that it's definitely the future. And now my role personally is CEO and co-founder of Liquid Finance.
Thank you, David, for that introduction. And yeah, super interesting to hear about what you guys are doing in the market and some of the innovative ways of bringing in new liquidity. I think the trade finance gap, as we know, is a growing concern and quite literally is growing. I think it's being reported now at about $2.5 trillion. How much of a concern is this gap and how can we bring in additional liquidity into the commodity trade finance market?
First of all, where does it come from? I guess it's also very important to point that out. Regulation has been, quite painful for the industry. I would say that Basel 3 and Basel 4, even more, beginning of this year has been a huge trigger for this, gap. The main thing would be to manage to bring back the confidence of all the investors, institutional investors. And I guess, we're going to discuss it later on, but we have to find a better way, more efficient, and being able to explain the risks and, kind of educate the people about what we're doing.
Yeah, I think that's a very good point about education as well, because we're bringing in, potentially these are investors that are often investing into vastly different asset classes. So the CTF market definitely needs to educate some of these demographic in more detail. It's a good point as well that you made in regards to regulation. I think since 2019, we've seen a huge amount of increase into going into Basel 3, Basel 4. Basel 4, I think, is going to be an interesting one. And that's one I think TFG is going to be talking quite a bit about in the future, just as we kind of introduce things like output floor and what does that mean for banks' appetite. But going back to the institutional investors, what concerns do they currently have, when investing into this space?
If we put ourselves in their shoes, they're trying as much as possible to avoid risks. The problem of this industry is a lot about, a lack of transparency, problem related to jurisdictional enforcement, operational complexity, and even credit risks. And so for them, not having the knowledge, or let's say, looking at an industry that they don't master, if I can use that term, it's very frightening. And they get to the point where they rather not invest than investing in. Then, although it could be very attractive, right, in terms of performance, they would say, there are others, let's say, investment that we can do without taking the same risk, or at least understanding better our risk.
How important is the need to increase transparency between funds and investors? And how can technology such as what Liquid Finance is doing, how can that sort of achieve this?
In my opinion, it's vital. Why? Because if you're fair and you explain, I don't believe that there is anybody on earth that haven't done any mistake, and mistakes will be done. The real thing is, how do you deal with those kind of issues? Now, if you're completely transparent and you explain to those same investors and you tell them, hey guys, we've done that, we failed. That's why we failed. That's what we're planning to do to recover it. And we took all, let's say, the guarantee for it to minimize as much as possible the risk, then you've done your best. And I believe that people will feel more comfortable to invest with you if they know that you're willing to share your information, give, for instance, reporting, explain what is your processes. And I think that's the key metrics, is to have clear processes in place where it shows that you're capable of executing and managing whenever there are issues.
Yeah, no, I think that's a very good point to make, and particularly the one you made about mistakes have been made in this market. I think that's, it's very clear.
And will be, and will happen. No, let's be
it
honest.
does.
It will, but it's okay.
Exactly. I think the issue I've always seen is that essentially when maybe a trade finance fund has perhaps failed or has maybe been involved in some fraudulent activity, I always worry that perhaps the entire market gets tarred with the same brush.
When it happens, it won't help. We're all different. You can take that and extrapolate to all type of industry. I don't know, venture capital. Eventually, those guys also failed. Now, would all the investors stop investing in venture capital? I don't think so. Maybe they will be more selective. They will look at more transparency, for instance, or the processes internally, or they will do due diligence heavier. Like basically they will go and meet the teams no matter where they are on our planet. And that will be the huge difference. But then again, at the end of the day, it comes back to one thing. It's trust. What is the trust that you put in those funds?
I appreciate that. I think that's a very interesting point. One other thing that I've seen, over the last few years with institutional investors coming into the market is margin expectations. And I think that's a good point to kind of discuss. There seems to be a bit of a disparity between the margin expectations from institutional investors coming in with high expectations and perhaps borrowers having perhaps lower expectations coming from historical banking lines that they had a few years ago when they were probably more attractive for bank financing. So how do we address that disparity?
It's a very good question. First of all, where does it come from? In my opinion, there are two factors. The first one is education. What you know, what you learn, what you are familiar with in your industry or not, if you're specialized in a certain type of commodity. And that is also based on data. For me, data are key to what we do. In general, is very important no matter what you do in life. I would say that the main issue here, you have pros and cons. Borrowers usually benchmark the CTF funds as banks, which in my opinion, it does, but it doesn't make sense. It does because obviously they borrow and you have investor on the other side, but on one side you have like a line of credit, on the other one you have eventually, like a transactional based investment. And then I would say that what is very important is that each one of them don't take the same risk. They don't look at the deal the same way. Insurance based, it's also, pretty much different. Why? Because most of the CTF managers are on ground. They're there. They see, they monitor, they're faster. They actually bridge the gap that we were talking earlier by just deploying with expertise people in order to get what, again, we said at the very beginning, efficiency and transparency. I would say that at the end of the day, they are the one that the CTFs are the one that will manage to bridge the gap.
Hey, enjoying the episode? Tap follow for more. Done? Let's get back to it. And I think it comes down to what you've been saying as well, which is about education. The market as a whole needs an education. It's not just for the institutional investors. I think it's everybody. This is different.
Think about it. Why would they take a premium? What would be a difference? Because they're eventually faster for most of them. They're more knowledgeable about the industry because they're way more specialized. And they tackle eventually commodities that not everyone tackles. And you're already there. You might understand the disparity in the margin.
No, quite right. And I think you're absolutely right in terms of, specializing in the market as well. This is generally the more focus. And I hope we see more trade finance funds emerge out of this. And I think that also going back to kind of looking at the trade finance gap as a whole, generally it's more SME mid-cap traders that are getting their applications for trade finance rejected. And we've seen that statistic rapidly increase. And obviously I think, David, you've touched upon a lot of these reasons: higher regulation, higher risk mitigation. But one thing I'm quite interested to hear is perhaps how this demographic can make themselves more attractive to financiers.
I might repeat myself, but data transparency is extremely important. Why? Because people want to understand. Not all of them understand. And even if you put them in their nose the data, most likely they won't understand it either. But at least they feel comfortable with the fact that they have access to those data. That's basically one of the key metrics. Now, the second one is strong governance. Why? Because it's the same thing as a startup. If you have the right team, you have better chances to succeed, or a company in general. Also, the consistency of having like historical deals that were happening the right way because you put in place, like let's say internally Chinese wall, the processes that double confirmation and things like this. Eventually, if you package all of this and you put in addition, let's say, type of partnering with platform or fintechs, or a way to be more efficient in what they do by digitalizing all of it, they will become way more attractive to investors.
Yeah, I fully agree. And I think other things like increase insurance, but also, utilizing things like inspection, CMA products as well. I think that's how you create a little bit more for perhaps the finance.
Mitigating the risk at the end of the day, that's what investor wants.
Yeah, no, exactly. And I'm a big believer on the ground CMA type work that we see inventory risk. And I think now more than ever, as risk mitigation has increased, surely we need to increase some of these other services, create a bit more trust and transparency. Another factor that's come up quite a bit in the CTF market is innovative new ways of financing that I've heard quite a bit about. We're, in fact, Trade Finance Global are doing a webinar on digital asset finance. How can we rely on some of these new innovative ways of financing, such as things like stablecoin or crypto financing? I see that's coming up a little bit more. What are your kind of thoughts on that, David?
If it's done correctly, it could be very promising. I believe it's promising. Still, early stage. Stable coins, in my opinion, are obviously speeding up all the settlement and cross-border payment. Now, the question is, I would say the adoption. That's one thing. The market itself, also all what is related to regulatory clarity, and risk control. At the end of the day, if you don't have those two metrics, it's going to be complicated. So I guess for now, it won't replace, but it will be complementary. It will be more in places where, I would say in regions where you have limited access to banking infrastructure. That would be my take on that one.
Agreed. It's still very early stages. We've seen a couple of the first deals coming in. There's borrowers that's going to have massive appetite for this, and there's going to be some stumbling obstacles that they have to overcome. Again, it's innovative, it's new, and if it's a good way of bringing in new investors, then why not? It's something to consider. So, David, perhaps on one of the last questions here, how do you see the trade finance landscape evolving in the next 5 to 10 years?
I believe that if we manage to combine all the points that we've elaborated earlier in that podcast, if we provide transparency and we set up, in a sense, we build up this industry in a more institutionalized way, which means a lot of work at the end of the day, like in different types of words, I would say a lot of policies that you have to put in place, a lot of processes, a lot of things that will comfort the institutional investors eventually, if so, because it's a very attractive space, right? If you think about it, you're over collateralized as an investor. It brings you also diversification if you look at your portfolio globally speaking, because you're decorrelated from the equity and the bonds. So you have something unique there that if we do it right, a lot of money will come in, because it's, in my opinion, the real economy. Think about it. Tomorrow you cut all the financing of commodity, it's over. Everything is over. At the end of the day, it's essential for it to happen and needs to happen.
Not only is trade is paramount, but not only that, let's look at the role commodities plays in things like the energy transition. If we're wanting to hit those goals, a lot of this is coming from commodity trade finance. David, thank you so much for this and for joining me today on this podcast. I'm personally incredibly interested to hear a little bit more about the story of Liquid Finance. David will be at the inaugural TFG Geneva conference, where Liquid Finance will be one of the sponsors. And David himself will be leading a very prominent keynote panel on incentivizing institutional investment in the commodity trade finance market. And this is one where every client I've spoken to is personally incredibly interested to see. Thank you very much, David. Thank you everyone for listening as well. This has been Trade Finance Talks.